where is the money at? Everyone trying to figure out what exactly is happening to the money, especially regarding the NGX, because results are coming out. We're seeing banks releasing their results. Access Bank is one of them. Results finally out regarding Access Bank. And if you're just joining us, this is Market Watch, brought to you by Nairametrics Television. We're going to be taking a look at the result, crunching a few numbers, but not so much numbers that you wouldn't understand. We're going to break it down. What do those numbers mean? You're going to find out. And then moving on to the second story, we're going to take a look at what is happening to the NGX, the all share index. From the NGX, the general performance of the market. But I know Mukhtar Mohammed does not like the all share index. We're also going to be taking a look at what is happening with Nigerian Breweries. All these stories is what we're going to be taking a look at on this episode of Market Watch. My name is Frank, and you know I don't come here alone. I come here with two able gentlemen. First is Mukhtar Mohammed, and the other is Idika Aja, the man behind the articles. You're very much welcome to this episode of Market Watch. I missed you guys last week.
Yes, we do too.
Welcome
back. Thank you.
Thank you. How's the market been? Let's start with Access Bank. Results finally out. It's like the long-awaited result. You know how you're in school and they tell you the result is on the board. So you're going, your heart is panting. Investors are literally looking at what the numbers and what is really driving the market. Let's start with that. What do you think contributed to the decline? It was not so great a performance based on their result. What do you think?
Well, if you look at that result, which Indika have done justice to, if you go to the Nairametrics speech, you realize that two key indices that drive their growth, the last half-year quarter was down by almost 240%. That was the growth that have to do with foreign exchange gain, also, and also that then the imperial charges also were those two major things that brought that those two contributed to like about 416 billion, bringing down their profit after tax and that. Then you look at the earning per share also went down from a high of about 6 naira to about 3 naira plus by almost by 51%. But again, for me, that was largely driven by first they were now having using the 50% addition from the right issue came in there, so that contributed to that the decline in the earning per share. But when you look at the company, you see what the holding structure can do to a company. We saw hydrogen, we saw oxygen, and we saw their assets. Also assess ARM pension. We saw even, I didn't even know that they have a broker's insurance company. We saw all those how they contributed to the bottom line with about 65%. For me, that was huge. So that means they are trying to diversify and seeing how those are the positive I see in the result. My only take on it was that in spite of this contribution from their subsidiary, the holding company, they were not able to pay dividends to the shareholders for the first time in maybe like 5 years that Access Bank have not paid interim dividend. I think that for me is the shocker of all the result. But when you look at key drivers, the result was fantastic. But the only negative I see is in the non-payment of dividend. Organic growth is releasing income, interest. You could see the numbers; they're very, very impressive. But I think what was responsible for that low number in organic, in terms of not being able to pay dividend, also outside the share outstanding increasing by 51%. We also saw those risks challenges in terms of trying to guide against risks, and you saw that is also seeing the result that their borrowing is negative. Also, that also was a big challenge. But going forward, they look good. Hopefully, we've seen the end of this what we call the long delay that result happened, and the fact that the market, I expect the market will react to those results today. I expect the market to punish them. Not because the result is not good, but because it stayed a little bit too long to come. And again, they've already assured the market during their last AGM, and assured investors that they will be paying 1 Naira dividend in the interim dividend,
And they didn't fulfill
that. And also, when they brought out their board meeting resolution that was awaiting the approval of central bank, they said that they've also approved dividend payment to their shareholders. So this came as a shock to investors and shareholders. So we could see that impacting the price negatively. But again, like I said, looking at the overall picture, there's a lot of positivity.
The gross earnings, 2.5 trillion. By the way, I was going to tell you secretly, I'm not going to shout. I'm definitely one of the investors that would be driving that market. Well, based on what you said. Anyways, look at their gross earnings compared to their 2.5 trillion gross earnings. The last time I checked, what do you think about that? What, Idikaja, what do you think about that?
Yeah, thank you very much, Frank. Gross earning of about 2.5 trillion, one of the best among the banks. So
then 216 billion
profit.
Yeah.
Well, the margin is much. That tells you one thing. Not too good in terms of efficiency.
Operational cost.
Good operational cost is eating. Maybe because of, yes, Access Bank is trying to expand, both non-banking areas and outside the country. But what is just telling you that, fine, with 2.5 trillion gross earning, that means they are making money. They are driving it.
Yeah. And
216 billion in profit. So that is, the efficiency is not too good.
So
the margin, that's showing you that it's a margin compression.
Yeah.
And if you look at the result, like Mukhtar really pointed out, at the core level, that the core operation, fantastic. Okay. At least net interest income about, I think, 984 billion. Net interest income after impairments, I think 716 billion.
Yeah.
It's okay. I think where the problem is there is non-interest income, where they have problem. Not really a problem because the foreign exchange gain declined from 406 billion to 46 billion in H1. So apart from that, there was equally a surge in impairment from 122 billion in half year 2024 to 230 billion in half year 2025. And equally, our pressure on their operating costs.
Yeah.
So those things are really affected them. So that is where you have that wide margin.
So let's go right into the impact in the market, especially with their share price and what you think how do you think investors are going to react? I'll start with you.
I already told you that the market will punish them. I don't see how they will escape the punishment from the market.
They're currently at 25
Yes,
Naira.
you see, if you look at Access Bank, you look at their right issue. Their right issue was one of the cheapest. If you look at the tier 1 banks,
yeah, true.
They had one of the cheapest right issue at 19 Naira, and up to this moment, when you look at others, even other banks that are done right issue or public offer, you realize that their price movement has been the slowest. If you look at GT, you look at UB, you look at Zenith Bank, you look at FCMB, you look at Sterling Bank.
Yeah.
The list, you can go on and on. You realize that in terms of their right, the public offer, you could see the difference in price. Most of them have increased by 100%. Most of them have increased by 60%. So, but you didn't see that in Access Bank.
True.
And so investors were trying to use the current result. They told investors they have 5-year strategic plan. Investors will soon be reaping the benefit. I think investors feel that stock is giving them too much long suffering, and they are not seeing relevant reward for their long suffering. But the investors were optimistic that the long suffering will come to an end by this half year because of the interaction the last AGM. But that is nothing. But I think again, the punishment of Access Bank could also create opportunity for discerning investor. Like Indiga said, like the organic growth is there.
Yes.
The era where bank enjoy foreign exchange gain is over. But again, there's a new one where the bank is suffering from foreign exchange gain coming down. We see the consumer goods sectors now beginning to enjoy foreign exchange gain. So let's see where that takes us to. But I think the market will punish them.
Nigerian breweries. Nigerian breweries. They released their 9-month 2025 results. What's your take? How do you see this result, and what are the key drivers? Idika, what do you think about Nigerian breweries?
Well, Nigerian Breweries is a major turnaround. They have continued, and that's good. But I think the problem there is that in Q3 alone, I think they sustained a loss of about 4 billion. That's equally increased their return losses, because what investors are watching is how soon they can come out from that return their losses and exit that and possibly return back to the path of dividends.
Yeah, very true.
So that is very, very important. Now, I know, I think for the first 9 months of 2025, I think they recorded a profit of about 129 billion.
What do you think, Ab? What do you think was responsible for the loss?
For Q3, the reason for the loss, I think they have an impairment of 6 billion.
Oh.
So that's what actually contributed to the loss, which was not there in 9 months 2024.
Yeah.
So that thing alone drove that loss. But if you look at the 9-month results, it's still okay at 129 billion profit. The revenue is okay, the profit is okay, and they are coming around. Unlike, in 2024, remember they sustained I think they have retained losses about 169 billion.
Yeah, very true.
So, and the key thing, the most important thing for investors, how soon can they exit the return losses so that they can return back to dividend payment. And give and take, if you're looking at them, if you project very well, if they're able to sustain quarterly revenue about 30 to 40 billion for the next 4 quarters, they will be able to exit that return losses, and which is consistent with what they have been doing aside what happened in Q3.
Very true.
Aside what happened in Q3. So if you remove that Q3, if they're able to sustain quarterly profit of between 30 and 40 billion for the next 4 quarters, they are likely to exceed their return losses and possibly pay dividend for 2026 financial year.
Okay. Mukhtar, what do you think? Do you see them recovering very soon, especially going into
the master Ndika has spoken, so they should hold him. He said they will pay dividend in 2026.
Idika loves consumer goods.
I am not confident that they will be able to pay dividend in 2026.
We work on
look at what happened. 169 from 169 to 85 billion.
You see, sometimes that's what we say. We just said something about Access Bank. The numbers improved. The liquidity improved. Sometimes the bank look beyond. They will now be looking at where they are coming from. A bank like Nigerian Brewery, I know it might be hard for them not to pay dividend because they have been known as a dividend-paying store, but sometimes they might look at reinvestments, because if you look at what they are enjoying in terms of liquidity is the right issue, that and also the investment by the foreign subsidiary into Heineken Group, into Nigerian Brewery. That has helped stabilize them. I like the numbers. I like the fact that the cost of borrowing for them is going to come down. They are not borrowing so much. They are highly liquid. When you look at Nigerian Brewery third quarter result, every time, any year, you always see those slight challenges. The time that Nigerian Brewery result normally peak is towards the end of the year, and you and I know why, because we're going into the festivity period.
Exactly.
So a lot of drinks are being taken during those periods, especially people from Indika's area that are going to the southeast during those periods.
So your area, your people from your area, they don't enjoy their Nigerian Breweries product.
I said those that will boost the earnings.
Can you imagine?
So we will be seeing that, because festivity period is better in the southeast than any other part in Nigeria.
That's true.
I mean, let's be sincere. That's what normally happens. So if I look at that, I'm excited about that.
Even the Midwest, too, which is your area, they still do that.
Okay. So when you look at that, I'm excited about those numbers. I like it. From a loss, I mean, if you look at the loss that they were involved in before, about they've reduced it to the barest minimum.
Yeah, decently,
and they are getting a first gain, and I don't think it's over yet because the Naira is still having a good time over the dollar, and we think that will continue for a while. So, will I be buying Nigerian Brewery? Yes, I will be buying Nigerian Brewery, but like I always say, the market will punish you, and the market punished Nigerian Brewery when the result came out. They still punished them because the people are saying Nigerians can, investors can have this perception of, because if investors have the same perception Indica has, saying that Nigerian Brewery might pay dividend 2026, people will key into it. But investors are beginning to look at that stock as a stock for the long term, good entry point, good exit until there is stability. So I'm not as confident as he is, but I think it creates opportunities. It's a big brand. When you look at Nigerian Brewery at 72 Naira at the close of market on Friday, and you now look at Guinness Nigeria at 154, the difference is very wide. And so that's where comparable analysis comes to play.
So you see a lot of growth.
A lot of growth is still there, and the numbers are good. Numbers are good.
Yeah. To add to that,
yes,
like you said, when you look at the valuation and the share price trend, which they support upside potential.
Very true.
For Nigerian breweries, and so far I think it has gained about 133% as at last week. So for, like I said, for those who, like you really pointed out, for those who are still interested in dividends, yes, it is good. You might decide you can take a position now because we'll see upside potential in the stock. So yeah, he's right. It's okay. It's okay. Especially if you are looking for dividend, I am sure that they are likely, if they sustain that profit, they are likely. They are likely to, once there's, because it is that you cannot pay dividend with retained losses until you exit that. And their balance sheet is okay. They have restructured their balance sheet. The only snag there is just the retained losses, which is, I think it should be about 86 billion now, from 169 billion in 2024.
Yeah. Very true.
But so like I said,
if they sustain that profit they had, like I said, excluding the Q3 where there's a drop in Q3, if they sustain it, in the next 3 or 4 months, they would exceed that retained losses. And one thing is to exceed, one thing is to pay. So, and investors expect them to at least to compensate them for the waiting.
If you look at, we're 1.2 trillion naira away from the 100 trillion naira mark. Talking about the all share index. The general market capitalization is currently at 98.8 trillion. This is a fantastic number for the market in general. But let's talk about the all-share index. What do you think as at close of market on Friday? 6,667 points to close at 155,645 basis points. I don't want to deal with a lot of numbers because our viewers, you know what they always say.
They say they don't want numbers.
They say they don't want numbers. But we can't do without the numbers.
The
numbers is what gives you a buying decision or a selling decision in the market. It informs your decision as to how to approach the market. So please, you have to just find a way to make do with the numbers. But we're going to break it down. What do you think about this 4.48% weekly increase as at last week? Do you think this week is going to mirror the same thing?
Yeah, I think so. We've been saying it here. We're even expecting that the thing will cross 100 trillion.
The day it happens, most likely we should pop a champagne
here.
You
understand? We said it that it's likely that it will cross 100 trillion market cap. And we are now on 98. Now, you see, it's very simple. This is earnings season that is driving the NGS. Right now. So, and the momentum is increasing. Secondly, which is very, very important, remember that as at this time, maybe last year, yield from the fixed income space was maybe around, especially Treasury bill bond. Most I can remember around at least over between 20 to 24. Now the yield has dropped. So almost not even giving you that real return.
Yeah, true.
So definitely people will tend to move into equities, which is at least one of the traditional assets that can give you return above inflation rate. So that's another factor. That's another factor too.
Yeah.
But because of the earnings season we are now, so people are just taking a position, and the stocks are moving. Stocks are moving. Look at what happened to Arada, Stanbic last week.
Yeah.
Well, for me, I think he has hit the nail on the head.
True.
What I love about the Osher Index movement this time around is that we are not seeing the movement based on listing. We are seeing the movement based on appreciation in some of the companies that are listed. So
Very
for
true.
me, that's the positivity about it. That tells you about the fundamental of the Osher Index.
Where do you think liquidity is coming from? You think it's coming from new? Are we adopting a lot of
liquidity? Is coming from more quarter now. As you see, we have retail investors. We are now having foreign investors trickling in, and we also have high institutional investors also playing the market. All these are contributing to the liquidity that we are seeing. And that's why I say it's largely driven by fundamentals.
Yeah.
And like he said, they see upside in terms of price. He talked about Arade. You've seen Arade move from 2 months ago, was selling at 5 naira, 10 naira, 5 naira, 20 at what, you got to 5 naira 30 today at the close of market. It was doing 790. And after that, we saw that announcement of the
acquisition.
Oh, yeah, the acquisition. Yeah.
So we expect that to go. We've seen Dangote Cement also moving higher. We've seen Boaz also. We've seen all these highly capitalized stock moving better, exception for the banking industry that we didn't see the kind of movement that we've seen.
But the banking industry has tried.
They really tried. But again, we are still looking up to. They are the live wire of the market, whether you like it or not. And once they start ticking, the market begins to tick. And we've not seen any third quarter result from any of the banking companies, financial banking stock yet. And hopefully we should see one. So if that comes in, which I think, we have seen from Stanbic. We've seen from Stanbic.
True.
We've seen for Stanbic, and it was good. So hopefully, the way it works, when one is good, the other has follow. So hopefully, I'm like I said, not a fan of the Osher Index, but also you have to look at the positivity. For me, the positivity is the fundamental, and the fundamental is it is largely driven by rise in equity stocks, not by listing.
You've heard it. The fundamentals way more important than any other thing you can think about, because the fundamentals literally has a massive impact in the way it drives the market. That is why we come here and give you all the information regarding what you need to understand in the markets per time, every Mondays and Wednesdays. This was Market Watch, brought to you by Nairametrics Television. My name is Frank, and on behalf of myself and the crew, we say we'll see you next time. Make sure you like, share, subscribe. Cheers.